And welcome back to Markets Africa. Well, now it's time to take a look at the best and worst performing companies in Africa over the past week with Hubert Danso. He is from Africa Investor. Hubert, thank you so much for your time this evening.
Glad to be here, Siki.
Let's start with the best performers because we like good news.
Okay.
And Maroc Telecom up 28% over the past week compared to the week before. What were the main driving factors for that company?
Well, essentially, we saw on our index a rise of about 4%, which we think is very positive. But the main driver here was really the fact that they announced some very positive first quarter consolidated results, which saw them rise in the region of 8.3% to over a $900 million profit, which we think is a key driving factor. But also they've announced a share buyback, which is going to stabilize the price.
Absolutely.
So I think that's another key factor for Maroc Telecom this week.
I always wonder about share buybacks because, you know, there's always an argument, is it better to give the money back to shareholders or buy up your own shares? But whatever sorts out the capital, I suppose.
Whatever sorts out the capital, and it depends what your past track record is in terms of delivering on the actual promises and your future plans for the business. So the market has viewed this as a very positive strategy for the company, and I think that's reflected in its
share price.
Absolutely.
And very quickly before we go to the others, and we saw a lot of interest in MTN, for example, here in South Africa, with the possible, all these talks about who they're talking to and who might be looking at them. Telecoms shares on the continent, generally a place that investors look at?
Oh, absolutely, very much so. After banking, it's one of the most dynamic sectors. There's still a lot to be done there. The subscriber figures are going through the roof. If you compare them in terms of returns with other telecommunication assets in the rest of the world, it's a very exciting space to be in.
Absolutely. We've got Safaricom in Kenya. Let's look at UBA. They also, I think, had results, but those results coming out this past week, up about 0.5% in dollar terms.
Absolutely. I mean, they've posted their unaudited 6 months results, which have been very well received by the market. On our index, they were up about 3.5%, which again we think is quite a useful position to be in. But I think, again, you have to give something back to the market, and you have to have that same strategy. And they've announced a 1-for-2 share scrip issue.
And we love 1-for-2 bonus.
We do, absolutely.
Let's look quickly at BBK in Kenya. You know, the Kenyan market has seen quite a bit of a correction, and that correction really going mostly to the index-linked stocks, and particularly the financial stocks. What's driving Barclays Bank in Kenya?
Well, I think they've come in on the tail of quite a positive upswing in the market generally towards the end of the week. But there's also been quite a high pricing for a lot of the banks. So if you look at the actual share price of Barclays in Kenya, it's quite competitive. So that's actually created a lot more demand and interest in Barclays, and they've capitalized on that. At least on our index, up 2.9%. So you know, we think that's something to be watched as well.
Okay, Lafarge, West African Portland Cement. I always find the Nigerian market very interesting because a lot of what's been going on at the moment is obviously the infrastructure drive that everybody's talking about, and we've seen that really boosting any shares that have some form of exposure to that. But what's been driving Lafarge?
I think, again, Lafarge, the market understands the infrastructure boom, as I mentioned. The president recently made comments that I think they have about a 6.9 billion per annum infrastructure deficit. Lafarge is absolutely primely placed to take advantage of this, and it's a safe bet for a number of the investors. So we think this is just a logical supply-driven opportunity.
And another Moroccan company doing pretty well. If you look at that triple-digit percentage growth, Omnium, let's talk about that.
16.3% increase in turnover after their recently announced results. Safe bet, nice and diversified as a group. So investors are pretty confident about that one. A consistent player. That's a relatively impressive stock.
Before we get to the losers, let's just talk in general about African companies. You know, we were talking with Dave Taser a moment ago about the global environment and how people are really chasing yield and they're looking for where they can get good returns. Is that something that's going to keep propping up some of our really solid companies like these ones?
Absolutely. I think that it's not just about the solid companies. I think it's about the regulatory environment, and a lot of the policymakers, as we've seen in Kenya, the Minister of Finance is very heavily involved, obviously, in the Safaricom. And we're seeing a number of public-private partnerships in some respects around bringing new assets to market. And I think those and the types of returns that they deliver are really catching the eye of some of the global emerging market investors. And as a consequence, you're seeing a lot of institutional investors, global players, coming to Africa, introducing new products, introducing new approaches, which is really driving some more activity on the market.
Let's look at the losers, or in a nicer way, the worst performers.
Yeah, you see, right. Well,
Let's start with Alez.
Alez, I think, suffers from a condition that the entire market is going through at the present time, and that is a bit of a squeeze on energy. So we're looking at oil, gas and kerosene. There's actually been some pretty strict government intervention which is affecting that price. Of course, investors understand that a company's operations will be affected accordingly and margins squeezed.
Will be squeezed. And it's interesting because we've got four Egyptian companies that have really done quite badly. Are the factors similar in each, Mobil, EFG and Orascom?
The factors are similar in each of those. Obviously, it's not solely to do with the energy issue. I mean, the case was affected by this. It was down something like 11.3, the case all-share index. But there's also a new tax that's been imposed on the free zones, which actually imposes about a 20% burden on some of these companies that operate in the free zones, and you're finding a number of these larger companies have subsidiaries that are actually operating in some of those zones. So the market has sort of stepped back and it's trying to wait and see and understand what impact will that really have at holding company level and the operations of the subsidiaries.
Absolutely. So we'll wait for the financials to see what may or may not happen.
Right.
And then in Tunisia, Banque de Tunis down as well.
Yes, that's down. I think on our index by 8.5%. I think this is really the market reminding the management that they run the company in some respects. This is particularly driven in many respects by the fact that they've changed their CEO and the market is waiting to see.
Uncertainty.
Yeah.
Absolutely. Good place to leave it. Thank you so much.
Pleasure.
Dan Sir is with Africa Investor, and of course we'll see him back here next week.